Basu, MD and Country President for Areva T&D, joins us right now. Ratin, thanks for joining us. Let me ask you this. You, of course, have the Hosur and the Vadodara facility that's gone into commercial production. You have another facility that's going into commercial production. How much of capacity utilization are you seeing there? How many months in the last quarter were they in commercial production? And what will be the impact of their commercial production going into this particular quarter?
Okay, first of all, these three facilities have gone into commercial operations at the beginning of April. We have a ramp-up phase, so we cannot get all the capacities in day one. So we have a ramp-up phase, which is from, let's say, 6 months to 1.5 years, depends on the particular factory. We expect by these investments in these three new factories, which was done over the last 2 years at a cost of about 950 crores, would help us to double our volume by 2012. So that's the goal.
Okay. Ratin, while year on year your sales were up 68% and profits were also up about 20%, quarter on quarter
27%.
Okay, 27%. Quarter on quarter the sales are a bit tepid, they are lower, and as is the profit. What happened? Something went wrong in the fourth quarter, or are quarters not the way to compare?
No, it is actually the business syndrome in a market like India. You probably know that the business cycle is over a 1 year horizon. So the kind of business we are in, it's not a commodity business where you decide or sell on a daily basis. So there is a business cycle. So therefore, the best way to compare is not to compare with the previous quarter, but on a year-to-year basis for a better comparison. But if you want to do a narrow comparison, the best horizon is to do the same quarter of last year, rather than the last quarter of rather than the immediate last quarter.
So year on year,
do that comparison.
All right, fair point. Year on year, how much will this calendar year or this financial year result in terms of increased revenues and increased bottom line? What kind of a percentage gain on revenues and bottom line are you looking at?
Okay, so I would answer in 2 points. First, in the last 3 years you have tracked us, so you have seen that we have delivered over 30% growth on a year-to-year basis or a CAGR basis. For this year, I cannot give you a futuristic statement, but there are enough data available to see that our backlog growth has been very good. Compared to last year at the same time, our backlog has grown by 38%. On a year-to-year basis, we delivered a backlog growth of over 50%. So we today sit on a backlog of over 4,230 crores. And we delivered a volume of 2,600 crores in terms of revenue last year. So you can make a quick calculation that we will certainly do much better than what we did last year in terms of sales growth.
Right. Ratin, of course, if I have the numbers correct, your debt has gone up to 470 crores compared to 100 crores. Could you tell us what kind of impact your interest expense, of course, the increased depreciation because you've inaugurated all these facilities, is going to have on the bottom line? And if you could comment on your cash flow position or operating cash flow, are the receivables increasing, decreasing in this environment? Are you getting paid on time?
Okay, so some quick remarks. So as the market knows that we are doing this capex through our internal accruals, so naturally it will affect us in terms of more borrowing. So that's why over a 1 to 2 year period time we will have higher interest cost, and that's the case which is in the year 2008 and 9. So we are going through that, but as we ramp up our production and get our volume, so you will see that this will be coming down. So that's point number one. Point number two is that we do get paid from the market. We don't see any major difficulties. It is true that some of our customers have their financial difficulties. So we are trying to see how best we could get our cash from them. But I would say no major anxieties in terms of cash collections or cash receivables.
One final question to you, Ratin. in state after state, one listens to this serious power deficit, and there seems to be some frenzied activity even in terms of putting up power projects, some of them, of course, ultra-mega, huge power projects. Would you say that you're in the cusp of an explosive growth in the power equipment sector, or do you think there are still a lot of policy issues to get sorted out and it will be more secular, steady, slow growth?
Well, the question is very, very valid. The way we as a supplier to this market see the market or the investors in this domain is that they have to have the coal linkages first, then they need to get their land, and then in the current market conditions they need to get their financing done properly. So in today's context, it's a bit difficult. So that's why we read in recent comments from the ministry that the target of 78,000 megawatt for 11 plants may not be achieved. But even if we achieve 55,000 to 60,000 megawatt, that will be almost a threefold jump of over what we did in the 10th plan. So I'm still positive, though you're right in saying that yes, the progress is not as fast as it should have happened.
Ratin, just one very quick question. You talked about what's going on. Obviously your capital expansion plans were based on the kind of growth you expected 2-3 years ago. Are you saying then that the level of growth has dropped off or has been postponed, which means companies like yourselves, including you, will not be able to use your capacity?
No, not at all. So if you recollect what we said in April 2007 when we started our groundbreaking ceremony, that time we said that on a basis of 2006, we will double our volume in 4 years. That means by 2010. So as we are sitting on April 2009, we are ahead of that plan. So that was the main target, and we're very much on that goal. Now we just completed our expansion, and again we are saying that based on 2008 volume, we will double our volume by 2012. It is true that there is a market turmoil, mainly due to financial conditions in the market since September last year. We expect things should turn around end of the year. We are hopeful on that. So we, based on the backlog that we have, we don't see any major issues in the near future. And when it's a near future, it's a horizon of more than 14 months, mainly because of our backlog that we have.
Point taken. Thanks a lot, Ratin, for joining us with all those thoughts. Europe is opening.